Hello, everyone. This is Peter,
And this is Eliu.
and you're listening to Pineapple Chunks. That drop was a total miss.
That was a miss.
Well, today we're going to be talking about Nikola. And, if you don't know what Nikola is, it's an electric vehicle company.
Tesla competitor.
Exactly. And Hindenburg Research has just called them a fraud. They're a credible research company, and they're saying that they're full of scams.
Fake news. Our second story is going to be about SoftBank, a Japanese company that has been putting a lot of their money into the U.S. market. It may or may not be causing a lot of manipulation in our stock market. So let's dive right in.
Let's get right into it. That's right. Hey, Eliu, I know I'm a very bad person, but can you move over to your right, please? There you go. Thank you.
Is that good?
Yeah, I
We're
feel
good.
like a better person already.
All right. I feel like a great person too.
So, Nikola. For those of you who don't know what Nikola is, they're a competitor to Tesla. And for those of you who also don't know, Tesla is an electric vehicle company, and the CEO is Elon Musk.
We know who Elon Musk is.
And for those of you who also don't know who Nikola Tesla is, he's a very famous scientist.
Really cool guy.
Who was very into potatoes. He liked potatoes and electricity. But Nikola has been getting a lot of hype this year in the stock market. You know, a month ago they were around $42 a share, and I think they reached a high of 50, and now they're at like $31.
For good reason.
On this news, and they have zero product. They don't sell anything. They have no revenues. And
This is strictly a design company at this point. So they've only created electric vehicle designs.
Exactly. They are a marketing company, and they've designed really cool trucks, like you just said.
And that apparently gives you a $3 billion market evaluation. So,
but the Hindenburg Research is calling BS. And they're saying that a lot of these claims that Trevor Milton is stating, Trevor Milton is the CEO. And Trevor Milton, I have to say, he is a crazy character. He is a walking lie.
he's a walking con man. He's a con man.
And I don't know. I think he's gonna do fine. He's gonna come out of this just fine. But he is just a charismatic character. Somebody who just garners attention. People believe his story. His story is heartfelt, and he has the charisma to rival Elon Musk and convince and talk his way out of any challenge that he faces or any attacks that he may receive. And but it still doesn't hide the fact that this guy is there's a lot of contradiction in what he says.
I think he has the potential to be a meme, just like Elon Musk is, or just like how Elon Musk has portrayed himself to be in the media. But a different kind of meme. Like Trevor Milton likes to have a lot of confidence in what he says, and that's how he's gotten so far in his partnerships, in everything, with not even a product to show for it, right? So Nikola specializes in hydrogen electric vehicles. That's the end goal. They want to have trucks that are powered through electric hydrogen as a source, whereas in Tesla is strictly electrical lithium batteries.
Right.
And it's cool in theory. I mean, H2 would be a lot less resources used up, no exhaust, but there's nothing to show for it. And
literally no product. They don't even have a hydrogen.
Nothing.
Nothing.
And they've claimed to have a product in videos, but all these videos have been debunked to be completely fake and
shady and just
malicious too. I mean,
the evidence is stacked against Trevor Milton.
But it was enough convincing that they were able to strike a deal with General Motors, a renowned company in vehicles, right? They've been around for over a century. They're very reputable. They're a good company. They're valued at around almost 50 billion market cap. But
with the Tesla craze, they are out of touch. You know, the huge rally that Tesla had this this past couple months before their stock split, now like companies like GM, Toyota, and Volkswagen and everything, like they have to start showing more electric vehicles.
They have FOMO. They want to get into the
Ultimately.
space because, I mean, electric vehicles are the future. Who are we kidding here? Like, I want an electric car. I'm sure
Right.
Peter wants an
I
electric
do
car. We
want
all want an
one,
electric
yeah.
car. They're cool. You don't have to put gas in them. I hate going to the gas station. I mean, I personally, I hate getting out of the car and putting gas in my tank and spending money on gas. But electric vehicles are the future, and General Motors sees that and is trying to partake. And one way of them partaking was partnering up with Nikola. But oh man, was that a bad decision? At least I think so.
Well, there are some hypotheses for why Trevor is doing this. I mean, he's made himself a billionaire on paper, but there are varying degrees. I say on paper in bold because there are varying degrees of billionaires. There are billionaires who actually have the money to spend, and there are billionaires who have money on paper. So there's like the upper billionaires and then the lower millionaires.
It's like, oh, you need $1 billion? Oh, I got you here. Like, we can go take the money out
That's
right away.
Bill Gates and Warren
That's
Buffett.
Bill Gates and that's
That's
Jeff
like
Bezos.
Real money.
And then there's
no, Jeff Bezos is more paper money.
Okay.
More because his net worth is based on his stock price, like Nikola or Elon Musk. So his net worth is based on the value of his company because he has the ownership of the company. And so it's not that he has that money, but he's valued at that much based on his ownership and what he owns on his assets. His and ultimately
an asset evaluation. Okay.
It's where his net worth.
Yeah.
And ultimately he can't, like he basically just takes out loans. He uses a lot of credit against his assets, or he just sells some of his stock to pay for billionaire stuff. But he's not necessarily, like, he can't just go and get all those billions of dollars out of the bank, you know. And Trevor Milton of Nikola is one of the lower class billionaires now, and he ultimately is one of the hypotheses is that he's waiting for his bonus, which is expected to come in 2023, because he has a vesting agreement that's legally binding. So if he stays with the company till 2023, he's expected to have a $233 million bonus. And for somebody who's a billionaire on paper and can't realize these kind of gains, that is a very appetizing number, because a bonus is real hard money cash.
Yeah. So, right. If you weren't a billionaire on paper, then that amount of money, 200 million, wouldn't be, worth a while for all the marketing and all the fraud that you're doing. But since he doesn't really have that tangible $1 billion in his bank account at his disposal, there's more incentive here. And he's just trying to play it all out. I mean, this partnership with General Motors is probably going to help him with these next 2 years until he cashes out. So very strategic on his part. Very smart dude in terms of marketing. I mean,
very intelligent.
He's gotten this far. Kudos. But yeah.
Yeah, he's probably gonna do it. I mean, it's going to be interesting to see what, how the market reacts the coming week. But with the electric vehicle craze, and with everybody being so in love with Trevor Milton, and really, I mean, when you invest in a company, especially private investors, they're investing in an entrepreneur, the CEO, who's going to be managing their money. The idea is like as a byproduct at that point, You invest in a great entrepreneur, it doesn't matter the idea. If they're a great entrepreneur, they'll make you money, and they'll do it in a way that solves problems, useful problems for people.
Right. So talking about investment, I think we can transcend to our next topic.
You think so? We should transcend? Yeah, let's go. Let's transcend into
So SoftBank is this giant Japanese company that has been
They're an investment fund.
They're an investment fund.
They're a venture capital fund.
Okay, yeah, they're venture capital, and they've been very involved with the United States stock market in a way where they've been investing in a lot of private companies and public companies.
We've heard of some of their big investments, like WeWork.
Right, WeWork was one of them, and
Alibaba.
Uber, Amazon, Alibaba was probably their most successful one.
Yeah,
It made the
one of the earliest
CEO.
ones.
The CEO was
Of what?
SoftBank.
Oh, Masayoshi Son.
Masayoshi Son. Try
He's
saying
the
that
he's
three
the
times
he's
fast.
the general the managing partner of the fund. I mean, the guy raised $100 billion.
$100 billion
Like,
from a $20 million investment in Alibaba. I mean,
no, he raised $100 billion. That's the fund that they have a fund called the Vision Fund, and they
Okay.
raised $100 billion. No, he's raised way more than $100 billion in his lifetime.
oh, okay.
Yeah.
Wait, no, wasn't his initial investment what got him to $100 billion?
I don't know what his initial investment in
What was
Alibaba.
Alibaba?
I'll find that. I know it. Masayoshi Son initial investment return in Alibaba.
But basically, this guy has a buttload of money now, and he's being very generous with a lot of tech companies here in America to the point where
Wow.
it's been manipulating our markets. So the huge influxes in stock market prices recently are part attributed to him because his firm has been buying a bunch of option calls on companies such as Amazon. And when you buy option calls, actually, Peter, you know more about option calls.
Right. Just before we go into that story a little bit more, with Masayoshi Son's initial investment of $20 million, they got 26% stake, around 26% stake in the company, and now
In Alibaba?
In Alibaba. So they invested in Alibaba in 2000, right? They invested $20 million, Masayoshi Son. And now Alibaba has a market cap of 600 billion. And they own 26%. Masayoshi Son and his investors.
Oh my god.
26% of that 600 billion. So what's 600 what's 26% of 600 billion? How many zeros? 1 2 3 1 2 3 Oh, 1 2 3 okay.
Quick maths here.
1.5 billion. Wow. From 20 million to 1.5 billion dollars.
That is a great return of investment. Wow.
Wow. What is that percentage wise? That is crazy. Wow. Anyway, so SoftBank has been they've been they kind of took a little side tangent and started investing in options, like how you said, right?
Yeah,
Did you
so
say that?
they right, so
You said that, right?
yeah, I did say that.
So they invested in call. Did you say they invested in? Yeah, you did. I was just researching. I wasn't even paying attention. Anyway, but so they've been buying call options, and for those of you who don't know what call options are, they're basically a financial derivative or a financial tool that investors can buy, and it's basically a bet of a company. A call option specific is a bet that a company is going to go up in value, or the price of a share of a company is going to go up in value within a specified time frame. And banks offer these bets, and they're willing to take on these bets. But you might ask yourself, how does this work?
Right. So the way this works is that someone on the other end has to sell these options.
Right. So, but an option, just so we can be clear, is a contract. And it's a contract that says you will buy 100 shares of a company for a designated price by this time frame.
Right, and the price fluctuates, and that's what gives you the return of investment or a loss. So the way that this works is there's a person or a group on the other side that sells these options to SoftBank, for example. Let's say SoftBank wants to buy Amazon options, and let's say I'm on the other side and I sell those options. I would sell those options, but I would have to be at a loss by selling those options. And so in order to counteract that loss, I would buy shares in Amazon in order so that I don't lose money, so I just break even. But
in other words, just to kind of take a step back I want to get into this a little bit more, is like if I was selling LU a computer, no, that wouldn't work. That's not a good example. I think I think a good example would be as if I was selling you shares,
A
actually.
bag of potatoes.
Well, it's like an option is basically a gamble, but the person giving the ability to gamble has to cover the risk. Because if I'm saying that a company's going to go up in value and it does and I'm right, then the person selling me that gamble, that bet is basically going to be on the opposite end. So if the company goes up in value, then he loses money cuz he sold me that, because he's saying, "No, there's no way it'll go up to that much." But I'm saying, "Of course it will."
And so me on the other side, to counteract that risk, I would buy shares in a company. And just so we're clear, buying options and selling options does not affect the price of a company on the stock market. Buying shares and selling shares of that company does. So when SoftBank buys a huge buttload amount of options and a person on the other side has to sell those and in turn buy a bunch of shares to counteract their losses, those share purchases are driving the prices of these companies up. And
Right.
as these prices go up, then we have a bunch of Robinhood traders, a bunch of other people looking at the prices go up and having basically FOMO at the end of the day. And so that drives the price to go up more. And so what we've been seeing recently in the stock market is all these tech companies booming in price. I mean, the S&P 500 has been doing great, and that's because the S&P 500 is 25% tech, big tech. One of them is Amazon, for example, which SoftBank bought options for. And
Well, we're seeing SoftBank do options contracts, and they have a bunch of money. I mean, we were telling you they raised $100 billion fund, so they're playing with big bucks. That's not like
yeah,
the $100,000 your average Robinhood investor is trading with. They're probably trading with less, but you know, you see a lot of funds like SoftBank who have billions of dollars of assets under management buying options contracts, and these banks that are selling the options contracts have to buy the stocks in order to compensate for potential losses. So, banks are in the business of making money. So ultimately, they're willing to give out these financial they call them financial derivatives, but really it's just, do you want to bet on this or not? And, the bank is going to make money whether you win or not. But the large increase in options buying over the past couple months, whether it be because of the stimulus package or because of people being bored at home, working from home,
or just people that lost their jobs and just needed an
or yeah,
alternative way to make money, right? Options is a good place to do that.
options is a great place, especially with the huge market volatility that we've been experiencing. So, I mean, I'd love to talk more in detail about what options are and the specifics about this, and let us know in the comments if you want us to talk more about this. But ultimately, what we're saying is, big funds who manage a ton of money, very irresponsible general managers who are looking to generate huge returns, are taking great risk in option contracts and making banks buy stock in companies, raising their prices artificially because they're just hedging their risk. They're not necessarily buying the stock because they believe that the company's going to sell. Like, they're not buying more Apple shares because they think Apple's going to sell more iPhones next year. They're buying Apple shares because they want to make sure that the gamble that Masayoshi Son is doing on Amazon, say, for example, hypothetically, is, that they won't lose money selling them that contract because they have to pay that person out.
In a way, SoftBank buying options is affecting the market, just not directly. I mean, buying options doesn't affect the market.
And everybody's doing this.
Right.
Everybody.
So, I mean, I guess the takeaway here is SoftBank is subtly, not being so soft, being quite harsh of a bank in manipulating the U.S. markets. We just experienced a tech bubble. It just popped a little bit recently ago, where all these tech stocks
plummeted. Yeah, last week.
Plummeted. Yeah, they just.
It's crazy.
It was unexpected.
Well, I mean, they were going up unexpected too. I mean, there was like
right.
a bunch
I mean,
of
what goes up has to go down, but
Mhm.
it was
We really learned the laws of physics. I'm looking at my account now. It's like sad, but nonetheless, these things are happening in the market. It's just something we want you to be aware of. If you understood what we said, I'm sure you did. I mean, we're speaking English, for God's sakes. But if we didn't make anything clear, please let us know in the comments, and we'd love to go into detail more. We're gonna do an episode about. We should do an episode about options. We do have investment news, and we should do and then we can talk about like hedging risks and things of that nature. But that's it for this episode. Let's cut it out here, and we're gonna record another one. But all right, talk to you later.
Peace.
Hey everyone, Peter here. You just listened to Pineapple Chunks. If you want to reach out and send some facts in or learn more about the show, send me a DM through Instagram, Peter Vivas with 3 S's, PeterVivass. Thank you so much, and please tune in to the next episode next week. Pineapple Chunks newsletter and podcast reflect the opinions of only the authors, who are not associated persons of any financial institution. They are meant for informational purposes only and are not intended to serve as recommendation to buy or sell any security in a self-directed exchange account or any other account, and are not an offer or sale of a security. They are also not research reports and are not intended to serve as the basis for any investment decision. Any third-party information provided therein does not reflect the views of Pineapple Chunks LLC or any of their subsidiaries or affiliates. All investments involve risk, and the past performance of a security or financial product does not guarantee future results or returns. Keep in mind that while diversification may help spread risk, it does not assure a profit or protect against loss. There is always the potential of losing money when you invest in securities or other financial products. Investors should consider their investment objectives and risk carefully before investing. The price of a given security may increase or decrease based on market conditions, and customers may lose money, including their original investment. Pineapple Chunks LLC is not a member of FINRA, SIPC, or the SEC.